Okay. Okay. Let's see. Can everybody see the slides? Can anybody see the slides? Nancy, can you see the slides?
I can see the slides.
Okay, awesome. Good.
Although I think I see your whole computer, but
Oh,
that's,
that's not
is that
helpful.
okay? Like I see
Oh,
the doc.
is it clicking through? What does
Yep,
everyone see?
it sure is.
Okay. Yeah, I don't know why it's not like full screen mode, but we're just gonna run with it.
Cool. Then I'm going to bring up my chat over here instead then. Okay,
Cool.
great.
All righty.
Hi,
See.
everyone.
Hi, everybody. Like, let's see. If you guys can hear us, we had some technical difficulties. My computer was not working very well, but we are back. Kristen is in the chat. I believe everyone can hear us now. Awesome. If you want to let us know where you're, I don't know why I do this, where you're dialing in from. I feel like I got that from T.
It sounds like so old.
Like, yeah, I know. I'm like, what is this? AOL? Like we have dial up. Okay, well, wherever you're joining us from, I think that makes more sense. Um, throw that in the chat. I am in New York City and it is currently very cold here, about 17 degrees, and I'm not enjoying it.
I
Nancy,
feel guilty. I feel
yeah.
guilty even saying so.
Like,
We live in Mexico during tax season, thanks to the pandemic accidentally stranding us here some years ago, and we ended up realizing we loved it and we should come down every year for all of tax season. And we're having a really chilly day here today. It is only 76 and it's cloudy. So, we're
okay.
whew,
Wow.
yeah,
Okay.
sorry.
Well, I cannot say
She's
that I
like, wow, yeah, I
feel
don't want
for
to
you.
talk to you
Like,
anymore.
sorry.
Life
Sorry for you.
choices, life
Yeah, a little
choices.
chilly.
Yeah.
Yeah, we have gusts of wind where it is the feels like of 6 degrees. So yeah.
Oof,
Yeah.
oof.
Makes you miss
Yeah.
Chicago.
I have a team member in Montana. It was negative 27 and her boiler went out.
Oh my
So,
gosh.
and
That's way
not negative
worse.
27 wind chill, like
No, that's actually
temperature.
negative 27.
Yeah. Yeah.
Okay,
Yeah.
she wins or
She does.
loses, I guess, in this case.
Yes. That's a contest you want to win. It's true.
Yeah, I'm like, no.
Yeah.
That's just
Yeah.
awful.
Yeah.
So thank you everyone for joining us today. I'm going to flip through. I am Kelly Gonsalves. I will be hosting and asking Nancy about her process, about essentially moving her firm from what we're going to call manual to automatic. She has some really great slides in store for you to show you the actual process that she migrated from. But a little about me. So I am a QuickBooks Advanced Certified Pro Advisor. I work with Intuit as part of the Intuit Trainer Writer Network. I work with Synder to help them make their software better for accountants. And we do these webinars once a month where we ask an expert to join us and talk about their process regarding e-commerce, in this case, POS systems or e-payments, just kind of depending on where they're focused and maybe how they can use the tool. I've been in business for 8 years now, based in, like we said, very cold New York City at the moment. And you may see my dog Nina join us. She is the tiny little Yorkie who likes to jump up on my desk. And so she's my coworker, and I would say that's how I spend most of my free time with her. Nancy, will you tell us about yourself?
Yes, I have been running my own firm called the Dancing Accountant out of Chicago for the past 20 something years, 22, 23 maybe at this point. And we have a hyper local client base that's in our neighborhood in Chicago, but we have a fully remote team that's all across the United States. And what I have been shifting my focus toward is assisting bookkeepers to, I realized in all of the education that I was doing for small business owners, it was awesome, but I was reaching one small business owner at a time. And then when I started branching out and my blog got traction, I was reading many small business owners. But I realized if I could reach the bookkeepers and accountants that serve those small business owners, I could really bust out the amount of people that I was helping. So I have been
Yeah.
shifting toward educating bookkeepers over the past couple of years, which I am really, really loving.
Oh, that's awesome. Well,
Yeah.
I'm sure on behalf of bookkeepers, I can say we appreciate it. So I think, like I said, I'm excited to show your slides. And what I want to do is first just highlight kind of how you got started, and then we can segue into the actual process part. But focusing on specifically e-commerce, POS, e-payments, and I always say this ranges, Amazon, eBay, Etsy, etc., up into Square, Stripe, POS systems. I'm going to say Toast, and you can tell me more about POS because I don't have a lot of them. Lightspeed is one that my clients use. How did you kind of get into this area?
Well, I really stumbled into it. I didn't know what I didn't know, which I think is one of the reasons that I really love working with other bookkeepers and accountants is that it's very difficult when you're a solopreneur, especially working in the bookkeeping and accounting space. It's really hard unless you're part of a group like Bookkeeping Buds, which is one of my main groups that I go to for support and knowledge. Realize is another one, NATP. There are a lot of them out there, but it's very hard, especially if you're not a member of one of those groups, which 23 years ago, those groups didn't exist. And so I was very alone and I didn't know what I didn't know. And it is easy to say yes to all of the clients that come your way
Yeah.
without having a niche, without knowing what you're about to, what you're in store for, basically, or what's in store for you.
Well, I
And
think it's scary to say no, especially in
it's
the
very scary to say no. It's also an honor to be asked, and I think that
yeah.
that's one of the reasons that we all say yes. In my situation, I got really lucky because
Mhm.
my ignorance ended up being a strength. I would go around in my neighborhood and in Chicago and the places it was sort of there had only been a few restaurants and a few stores there when we moved there almost 25 years ago now. And that neighborhood started expanding and transforming. And as I would go to a restaurant or a store or find somebody for professional services, uh, we would get to chatting because I'm a chatty person, and they would find out that I'm an accountant. They'd say, "Oh, I need one of those. I should have one of those, right?" And I'd be like, "Yeah, yeah, that's a thing that you need."
Yeah.
And
Just a
and
little
they'd say,
bit.
"Would you help me?" And I'd say, "Of course." I mean, like I wanted to help the people in my neighborhood because I
Right.
truly believe to this day it's actually one of our main values in our company culture is that strengthening the small businesses, strengthening and supporting the small businesses in the communities where we live actually makes our communities healthier by keeping chains out
Yeah.
and keeping the small businesses healthy. We're really contributing to our communities in that way. So they would
Mhm.
say, "Hey, can you help with this? Here's the point of sale system I'm using." I didn't get to help them pick. Um, yeah.
And I
So
say
I
that
was
often. You
handed
don't
it.
always get, yeah, you don't always have that luxury of saying,
No.
here's what we want you to use.
Yeah.
Yeah.
So I was lucky in as much as I know the heck out of my debits and credits, and I know how changes in debits and credits affect the financials and where things end up on a tax return, and that's gotten me really far in life. But it was all accidental. It's not like I took on a test case. I'm actually kind of glad I never gave myself that opportunity. I might have been scared away.
Fair.
So yeah, it was very organic. It was very organic.
Okay. I like it. Um, so here we go. Would you like to would you like to let us know what we're looking at?
Okay. So this is one of my early clients. I had a lot of fun making these slides because I went back through old client files and found some of these scans. I'm glad we went paperless so many years ago because
Yes.
I have these wonderful records of what I went through. So
Yes.
in the beginning, there were cash registers. Now, a cash register, as some of you out there may not know, a cash register is not the same as a point of sale system. Point of sale
Correct.
systems are glorified cash registers in a sense, but usually the point of sale systems are tracking a lot more information than a cash register can track. And so what we're looking at here is a client, they had a cash register. This is a cafe that ended up
Mhm.
expanding, and now they're both a cafe and a bar.
Oh,
They're still a client. They're still around today. I love them.
I
They're
love
like,
that.
oh yeah, they're near and dear to my heart. Um, and so what this person was doing, this was one of the partners back in the day, this was one of the partners of the company, and he would look at the Z tape. Actually, Kelly and I were talking about Z tapes earlier. I don't know if everybody out there is aware of what a Z tape is, but they're still called Z tapes or Z reports or Z receipts to this day. And what it is it was a receipt that would come out of the cash register. Long receipts come out like this. And it would tell you certain pieces of information that were essential for being able to do your bookkeeping. And National Cash Register, which is now known as NCR. I'm sure lots of you have
Mhm.
seen NCR on, hardware and software all over the place.
Yeah.
Back in the day with the cash registers, you would hit the letter X if you wanted a report for your bookkeeping that was just for an individual shift, and you would click Z if you wanted an end of day. And it would print out this long receipt that had all this information. And if you wanted to clear out the old end of day receipts, you would click ZZ. And to this day, in every point of sale software, you will see reference to
They set
X
the
reports.
standard like really early on.
They really did. Yeah, you literally would press that letter on your
Yes.
cash register and boom, there you go. So what this person would do is they had a cash register, old-fashioned one. This was a very like hipster kind of place, and they thought it would be cool and fun. They moved to Square eventually. Spoiler
I would
alert.
hope. Yeah, I would hope this is
Yeah,
not still what you're getting from them.
nope, nope. And so what they would do is they would hit they would get their Z tape out of the cash register, and they would fill out. They had a piece of paper where they would, as you can see, every single day they put in today's date, cash at open, payouts, cash at close, total payouts. They put all of this information in there. They would run their receipt for from their merchant services for what their credit card sales were and the tips they collected on their credit card sales.
Oh,
This was what I got. And
wow.
I was supposed to make sense of this. Now, if you look at this, do you know what journal entry you would book or what, deposit maybe you would book in QuickBooks to get this
Um,
data in there?
like, there would be a lot of, I'm looking around, so my brain automatically is like, gee, there's no different revenue streams. Everything has to go to one category. Like the way that I'm thinking about it is,
Mhm.
especially the way we do things now, would I really be able to help them look at what to increase or what to, like advisory level services, not from something
Forget
like
it.
this. Yeah, that's
Forget
not.
it. Absolutely. Absolutely. Also, how do you get a balancing journal entry out of this? How do you even book this into the system, right? Like you
Right.
have to watch them do a sale. You have to go in, like I did in person, and buy a tea and say,
Yeah.
okay, show me at the beginning of the day where you're starting. Now I'm buying a tea. All right, now run an X
Now what
report, which would have,
happens?
yeah. And then you look at what the change was. And then you say, okay, now I'm going to buy a scone. And now let's print out another one. You really have to get involved.
My
And
goodness.
yeah, it's tough, but it can be done. And we did, and we did it. And this client, bless their heart, this is one of the things I love the most about the client. You're right that they don't have any way to separate their revenue
Yeah.
streams here, right? But they did book a journal entry. We made up a recurring journal entry for them
Okay.
that they booked every day.
Is that the
Every
next
day.
slide? Do you want me to go to the next slide?
Yeah, would you? That'd be great.
There we go.
Right. So I was trying to figure this out and I was like, okay, first this is my chicken scratch on the left that was trying to figure out their chicken scratch. And what I figured out was you got a daily deposit to undeposited funds is what we would do.
Okay.
And and the
Before the
top
bank.
line on that, would be the cash sales, and then we'd have negatives on the deposit screen. And the negatives
Oh,
would be for the cost of goods sold, the repairs and maintenance. The next one was the cost of goods sold as well. And that total, that daily deposit, would end up matching what
right.
came through that they had, in theory, deposited to the bank. In this case, they were depositing to a safe. So we were reconciling this against the safe system,
Got
their
it.
physical count in the safe. And then we would also do a daily deposit to the credit card receivables for the amount of credit card sales and credit card tip income. And then we did a transfer from credit card receivables to the checking account. And when we did that transfer, it wouldn't line up with the amount that came through. That difference was the merchant service fee.
Ah, so
So it
you,
worked.
yeah, because now I think about it also, at least when I first started, a lot of it was the credit card companies were depositing the whole and then
Yeah.
taking a separate debit for the fees.
Yes.
And so that was something else that you kind of had to figure out what was in that fee, what was the breakdown, et cetera. So in this case, what I use as I call a clearing account, that
Yep.
was your receivables account.
Yes, exactly. That's exactly right. So we don't do it that differently now than it was done back then. We still have to figure out where are all these numbers coming from, what's adjusting it. Something
Right.
that I'm not seeing on here is that they would have also had sales tax that would have needed to increase that liability account. And I don't see that on here anywhere. I can't go back to 2010
Right.
and remember how we handled that. But I mean, I look at this now. And also I know at some point they started selling gift cards that they had made
Oof.
themselves out of little pieces of painted cardboard.
Yikes.
Yeah, I know, right? And so that selling the gift card would have increased
Right.
that liability account, and then redeeming it would have decreased that liability account. So there are a lot of things. Now, what would happen if they hadn't found me? What if they had found a CPA that just did their taxes once a year? They
Hmm.
probably would have just said, you know what? Um, there are two different options actually. I think I might have them written on the next slide, or maybe a few slides later if you want to pop forward. Oh,
Keep going.
this slide is actually their new and improved system.
I see. Okay.
This this system, I forgot to put this in there. This just makes me so happy. Yeah, this was their new improved system where they actually would, do you see number 2 on the right hand side there? It says print a Z report from drawer, record the cash
Cash
is something.
in
And yeah, I don't
drawer,
even remember what that means, right?
maybe?
Yeah. So this was actually way better than their last iteration of it, because this one at least they had an internal control that was reconciling
Oh my
their cash
goodness.
on hand. So, that was pretty cool. So I just put this on there because it made me laugh that this is the version that was one better than the first one I showed you. So please go to the next slide.
Well, let's
All
see.
right.
Are we looking for the one that has options or
Yeah. Actually, go back a couple. Sorry to
no,
make
you
this
tell
happen
me.
to you. Yeah. All right. There. This is it.
There?
Oh,
Okay.
nope. Nope. One
No,
one more. The
this
one with
one?
all the words. Yes. Yes.
This one.
So,
This one.
oh,
Okay.
this one. So do you see on the third one down, it says better than just booking settlements as income or annual tax return forced to foot. So the
Mm-hmm.
system that I just described as manual and painful and laughable, I mean, like I actually could not keep myself from bursting out laughing there, as it was, if they were working with somebody who wasn't willing to think through this process and figure out how to get that data into the system and have liability accounts, and
Right.
they ended up having consignments because they would sell local artists records and CDs and cassettes, and then they started hiring bands and they would have band payouts, right? Like it got more complex over time. And if they hadn't been working with somebody who was willing to do this, they might have had somebody who once a year would look back at what,
Yep. Give me
um,
your bank statements. We're gonna
give
look
me
at
your
all the
bank statement.
deposits and all of, yes, the withdrawals, and that would have been it.
And that's it. That's all there would have been. Or they would have, if they had been one level kind of more concerned than that and recognize that the settlements are not the same as the income and that there's a lot of other
Correct.
activity going on, they could have printed, you can actually get a Z report for any period of time. It doesn't have to be just end of
Okay.
day. I don't know if you know that. Yeah, you can run a Z report even today in point of sale systems for retail organizations, for example, retail companies.
Mhm.
You can run a Z report for any period of time. So this accountant, this CPA might have run a report from January 1st to December 31st of that year. And they'd say, okay, I can see from the point of sale that there were this many dollars of departmental sales. And
Right.
then there were this many dollars of gift cards sold, gift cards redeemed. You know, you could get that info for the whole year. And then you compare it to what your settlements were for the year. And you presume that the difference is the merchant services fees. You can book a single journal entry and go, okay, actually, these settlements are pretty, minus the fee, is pretty close to what the point of sale is telling me.
Right.
And so I'm just going to book one journal entry for the whole thing. So at least the way that we were doing it is better than either of those options. But obviously, prone to data entry errors. You've got to take a lot of time to figure out how that source document is populated.
Right.
And, you know, what they're, like I said, I had to run it and then buy my tea and then run it again. And I want to make it clear, this is still the case with a lot of industry specific software. There are some softwares out there that are very important for a given industry that I have worked with and continue to work with, where we still have to do something like this. They're not handwritten anymore, and I appreciate that, but there's
Yeah.
still a lot of people who, yeah. And I
Well,
mean,
there's a
those
lot
people were
of,
willing to book it once a day, but a lot of people aren't, you know, they'll just book
yeah.
it once a
Also, the softwares are not typically focused on the accounting side of things. They have an
yeah.
accounting aspect to them. But for the most part, they are not specializing in our journal entries or how to import or
As a
how
matter
to
of
connect.
fact, I have so many times, it's one of my favorite quotes in our world. You know, one of them is, I have a quick question. Another one of my, right,
Yeah.
3 hours later. Another one is, oh, I talked to the sales rep. He said that
Uh,
it syncs with QuickBooks,
mhm.
right? Famous last words. That does not happen in general. And so you say, well, okay, can you please have the sales rep send me the owner's manual? And you look at the part on accounting and it turns out the sync to QuickBooks. Oh my gosh, it's astonishing. With Booklog, it would sync with QuickBooks, which is fabulous, right? Because it
Right.
was giving us the cost of goods information that we then had to reverse for every single transaction because it was incorrect. So some of
Right.
them sync, but sometimes the and I love what Kristen is saying in the chat here, the sales rep, well known to be fantastic accounting minds, right? Their job is to sell you something. Their job is
Yes.
not to make sure that your bookkeeping is accurate. So take that with a grain of salt. Have, before you commit to a point of sale software, talk to your accountant, put your accountant in touch with your sales rep. They will know what questions to ask. And most of the time, I
Right.
have found the native sync, even if one exists, you probably don't want to use it. You probably want to use something like Synder or Bookkeep or Shogo or Commerce Sync or one of these syncing systems out there that works
Right.
with a solution. They don't all support the same platforms.
Correct.
So you have to look at you know, what platforms are available for the industry that you're niching in, and then choose which company, which point of sale system you're going to use, and then choose which company you're going to sync with. Make that decision by looking at those beforehand if you
Right.
can. But sometimes, as you know, the client just tells us, here's what we're going to use,
Here's
which
what we're
takes me to the
doing.
next
Yep.
slide. Let's go to the next slide because this is a really fun one that I got. Okay, so
Like,
this is a Z report.
yes.
At least it's two parts of a Z report. I actually pulled this from my scans. This is an actual thing that I received from a client for real. And this was about, I would say it was about 3 feet long of a receipt that goes like this.
So is this the rest of it?
Yeah.
Oh my
There you
goodness.
go. Yep. It took me a little doing to get these all onto the same
Yes, on
slide.
one thing.
Now, to the point you were making earlier about revenue streams, there is some
Yeah.
additional information. This is an improvement. Um, look at the lower right side of the screen. What do you see that is an improvement?
The department sales, the
The
breakdown.
department sales. Now, this is huge. This is absolutely huge. Now look in the middle of this screen. Do you see where it says cost of goods?
Yes.
Okay, so that's awesome because now we've got a point of sale system that is also doing inventory management. So this is a
Huh.
huge step up from a cash register. A point of sale system, you're actually going to enter most of the time, some of the
Mhm.
time, if you're in retail and you have inventory, you're going to you're going to potentially order
Right.
your inventory out of the system. You're going to receive that inventory into the system. The system will know how many you have of each thing. And when you sell that thing, it will attach the cost of the inventory item that you've entered. It will attach that cost to the sale and it will report cost of goods sold. Here's our problem. Because right now I'm like, this is great. We've got departmental sales, got
Right.
cost of goods sold. Everything's awesome. What do we not have? We don't have cost of goods sold by department.
No, we do
So
not.
how is this helpful for analysis? I mean, it's way better than nothing.
I was gonna say it's still a step up.
It's a step up. It's a step up, but I mean, this client is still going to struggle because they're going to have all of this great departmental stuff in the sales, but we're not going to have that in cost of goods. And so in this particular situation, we booked everything for cost of goods sold to the parent COGS account. And then we would have them do quarterly inventory counts. And the quarterly
Okay.
inventory accounts would let us, they gave us just a little bit of extra information, made sure that our numbers weren't too far off. And as we were able, we would book estimates to get stuff, out of inventory into COGS or
Right.
vice
Move it over.
versa. Yeah. So this was a step up, but pretty challenging. So please go to the next slide. And this was the Excel. This was
I
me
like,
going
we can
through.
see the evolution of, we have it handwritten. Now we have a breakdown on a Z tape, and now we're gonna look at what it actually looks like on the accounting side.
Yes, yes. Now, I recommend, and I've been doing this for, nearly 30 years. So I get that, Kristen's saying this is a blast from the past. Linda's saying that they can see that we know what we're doing. Yeah, we've done a few of these over the years. It's true. This is going to make me sound like the old timer that I am, which is I still, to this day, even though I work almost exclusively with the various companies that are syncing these platforms automatically, I still do this as an exercise. I still go through a Z report or
Mhm.
whatever I'm getting, whatever set of source documents and whatever they're called. I figure out what are my key pieces of information that I can get out of the system.
Mhm.
I look at how that data changes depending on what the client is clicking on the screen.
Okay.
And I come up with a mapping that says, if this were being done exactly right, this would be how the mapping would work. And then when I actually map it into like in Synder, or whatever platform I'm using, I know what my test case is. I have something to
Right.
compare it to, and I know, yes, this works. Now I trust the
Right.
system.
If the
Um,
ideal world situation, this is what it
yes,
should look like.
this is what it should look like. And so this is what I did back in the day. And then if you go to the next slide, you will see, and these, by the way, these aren't all from the same day. And so if the numbers are slightly different, it's
Oh,
because,
I
you know,
please do not
one
add
was
one to
one from
numbers. These are just
2009, one
examples.
was from 2010. I grabbed what I had handy. But that Excel spreadsheet then turns into this, plus the next page is the rest of it. The next slide is. Yeah, so that is the journal entry. Those 2 pages are the journal entry that
Right.
that Excel would turn into. And I would say, okay, it works in Excel, it's balancing. When you do it in Excel, you can figure out if it doesn't balance, why, what is missing or
Where
what's
is
being
it
double
off?
counted. Yeah. And so that is a really, really, really great way to, in my opinion, to start. And when I go to a lot of tax conferences as well as accounting technology conferences, and there are still some folks out there that say everybody should learn how to do a bank reconciliation by hand. Everybody should learn how to do a tax return by hand, because if you can do it by hand, it means you really understand what's
Yeah.
going on. So I'm a proponent, and by hand, I don't mean by hand. I mean, in this case, in Excel, but it's still by hand, because you're not just depending on the sync to do it for
Correct.
you. Or in the case of a tax return, you're not just depending on your tax software to
Right.
do it for you. You have to understand it. So I would create a single journal entry like this. I would make it a recurring transaction, and either I or a member of my team or the client, I would teach them how to book it on a daily or a monthly basis, depending on what their needs were.
Wow.
So now let's go to the next one.
Like, but wait, there's more.
There's so much more. So what we're looking at right now is a client that I still have to do it the old-fashioned way. I
No
still have to
way.
do yes.
This is still happening?
This is still happening. So on the left, thank goodness we don't have that anymore, but
Okay.
this, as they upgraded their point of sale system, this is a record store. Record stores, like bookstores, they have needs for inventory management and reordering that
Right.
are best suited to happen from within the point of sale. So you really have to use Booklog if you're going to have a bookstore. You got to use Thunder or something similar to that if you're going to have a record store. It's very, very important. In this case, Thunder, it connects with Discogs, which is really important, and it makes it so that you can do both your on-site and your online sales, and you can do your reordering. It's
Here we go.
great
But
for inventory
yeah, of
management. It's not great it was not written by accountants. It was written
course not.
by people who need to manage the inventory at a record store, right? So that was
Fair.
a dot matrix until 2 years ago. It was on the left, the dot matrix, and that is your departmental
Goodness.
sales and sales tax report there on the left. One of the important things to know is that your source documents for coming up with what your Excel journal entry is going to look like, it's not always going to be one source document. You're not always going to get a Z report.
Right.
And this on the left this is a good example, because on the left you've got the departmental sales and the sales tax, and you even have some payouts there. There's some negatives where you can see they were buying used records for resale, and that's what those negatives are. So you have some of your payouts, you have your sales taxes, you have all of your sales, you have some liability accounts there. There's a store credit account, right, where somebody redeemed some store credit. There's another negative, right? So you've got to look at these and say, okay, I'm missing some information. I don't see tender on here. I don't see gift cards on here, right? Like, what's missing? So your source document isn't always going to be a source document. It may be source documents, plural. And keep that in
Right.
mind if you're working
And
with
kind
a
of
point of
having to
sale system.
cross-reference them essentially.
It's Frankenstein-y.
I
Super
like
Frankenstein-y.
that.
So on the right is the new program that they have. It's a lot cleaner. It's not dot matrix. They can actually export it to PDF, but it's cleaner, it's better, but we're still dealing with this. So if you want to go to the next screen. So the rest of the report that we get is on the left. This is like a Z report for
Okay.
Thunder. And on the right is that same kind of Excel. This was actually the reason there's so many pretty colors in that Excel, is that this was from the first time where we were trying to figure out how to get what's going on the left. Again, they're not from the same day, but
Right.
it is the same report. We're getting what is happening on the left and trying to figure out
Where do we put it?
what should my journal entry look like?
Right.
By the way, we stopped. I know in my early examples, we had like a couple of deposits and negative lines on those deposits. We stopped with that and switched to a journal entry approach some years ago, because it's actually, there was no with the settlements not being the exact numbers because they're batching from different days, your credit card settlements, there was really no point in trying to get it to match what was happening in the in the checking account anyway. So this is a simpler for everybody. Everything's all in one place. It's only one transaction.
Mhm.
I actually personally don't like it for the type of work that I do.
Mhm.
I don't like the option in the various sync softwares where it syncs every receipt. For a
Okay.
restaurant, that makes absolutely no sense. There's
Correct.
just way too much going on during the day, throughout the course of the day to keep all of that straight. There's no benefit to it. It's very confusing. So I
Right.
always select the option for a summary journal entry, but that's because of the industries that I'm serving.
Right.
And I obviously see, especially if you've got customer specific stuff and you're invoicing, obviously having it come through by sales receipt makes a lot more sense. So in this
Okay.
case, we put together our you can see that deposits on orders 27 in red and the office expenses, and that was 30 in red. Like we could not figure out, we couldn't get it to balance without those numbers. This is just us making notes. This is Kendra, who is my senior accountant, who is amazing and like patient as a human being could possibly be, because this was one that she did. And what I did not share on this slide were all of her comments that I cut off on the other side that was like,
The working through part of everything and the
yeah.
yeah.
But I mean, I will tell you, this was done, probably, I can't see the date on there, but it's something like, what was that? Okay, this was, the one on the left was from February 2021, and the one on the right was probably from that was probably from like late 2022. These are not old,
Okay.
right?
Wow.
Okay, yeah. So next slide, please.
Yeah.
All right. So this is another thing to keep in mind that I
Mhm.
did not know early on. And I think if you're going to A, truly understand how this works, and B, have patience for companies like Synder that have to write this software and the limitations that they have to deal with, this is a partial screenshot of all of the individual transactions. And by the way, the actual Excel thing for this is pages, pages, pages. It's like
Pages.
so many
Mhm.
lines long. I wasn't going to try to put that in the slide. This is a partial export of all the individual transactions that made up the reports that we saw on the prior screen.
Right. So
And it's our
before
pivot
summary.
table. Yeah,
Got
the
it.
reports are summary. This is the detail. Our pivot table's on the right. The first time that we went through this, we took one day and we took one summary report. We took one export of all of the detail. We did a pivot table to summarize them, and we made sure that they tied out because,
Wow.
and this is going to blow your mind, Kelly, I think, in addition to all the people watching, they don't always match.
Yeah.
You'd be like, it's the point of sale system. Of course, the transaction detail matches the summary.
No.
No, they don't always match. So we always check that first. It tells us something if they don't match, like, oh, that's because the point of sale software needs to track these things separately so they can calculate sales tax, and they can't put these other things in there until later, which means they're on a different screen, and as a result, blah 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 blah. So you learn about the process when you do this. You're not just trying to get
Mhm.
it to foot, you're trying to figure out why it might not, because that's going to tell you something about the
Right.
process.
What's missing? What do you have to look for? What do you have to be on the lookout for?
Yeah, yeah. So next slide, let me see where we are. Okay, so I'm trashing all of that stuff for now.
Okay.
We're done. We're done with the past.
Moving on.
Moving on. Then there was Square. I have a love-hate relationship with Square. You were asking me earlier how did
How you
I
happened upon. How did you stumble
yay.
upon?
Did I have a test case? Well, kind of, because all of a sudden, all these clients kept saying, oh, by the way, while I'd be working on the monthly close, we switched point of sale systems,
Lovely.
which
I love that. By the way.
if there are any small business owners out there listening, don't ever do that. Don't do that to your accountant. Show them some respect. Do not buy the way your point of sale system. It's a really important
It
decision
is
and they should be
such a
working with
common term,
you.
the by the way, or it's the after the fact of, hey, I'm missing a chunk of money essentially, or I don't know where this went to, or why is there more in the bank? Oh, by the way.
By the way,
Yeah. Or there's a
exactly.
deposit from Square, Stripe, etc. And you're like, hey guys, did you
Yeah,
start a new system and not mention it?
totally.
Just
Yeah.
hey,
New
just
credit
asking.
card, new
Yeah.
bank account, new loan. Oh, the loans are my favorite, which we're actually going to talk about those in a second related to Square
Oh
because
yeah.
they've got some predatory lending practices that are pretty
Oh,
terrifying. So they are actually a merchant services company. Square is not a point of sale company.
correct.
They're a merchant services company, which means they are making their money off of e-payments like debit and credit cards. That is
Correct.
where they are making their money. They're disguised as a point of sale system. Clients get drawn in by this promise of, oh, Square's going to give me a free, or now it's not free anymore. It's low cost because they offer so many bells and whistles. Not true. But
Mhm.
they're paying for it. It's not free. They're paying for it with the credit card processing fees and these
Correct.
predatory loans that happen at the register. So the client will be at the register, will be in front of their point of sale system, and it will say, need cash fast? Need a business loan? We
Right.
can give it to you. Square, who is supposed to be on your side, who's supposed to be a trusted partner in your business, is
Mm-hmm.
saying, do you need this? I mean, to be fair, QuickBooks does the same thing, right? Like it is
A
a
lot of
lucrative,
companies do it.
a lot of
Amazon
companies do
does
it.
it.
Yep.
Yes. I mean, a
Yeah.
lot of them do it.
It's a very common practice at this point.
Yeah.
And they're sometimes they can be life-saving. But please, if you get those kinds of things and you are in need of a loan for working capital or whatever, talk to your accountant first because there are amazing resources out there that we can use to help you find the best loan for
Yes.
your needs. It's not necessarily going to be that one where you click on your point of sale. And what happens with these kinds of loans, and the reason it's important for us as bookkeepers, not just to protect our clients from predatory lending, but is very important for us in our daily journal entry summaries, is that these loans that places like Square will offer you
Mm-hmm.
are so easily paid back by withholding a
Mm-hmm.
percentage of your settlement receipts every single
Correct.
day. So you have less and less and less money getting into the bank. So
Yep.
they can sometimes offer a lower cost, a lower interest rate loan because they know they're getting their money back.
Mm-hmm.
They know they're getting
It's
their money
pretty
back.
much guaranteed for
Yeah.
them.
Now,
Yeah.
sometimes they're lower interest, sometimes they're very high interest. I had one client who ended up paying something that it ended up being like a 300% annual percentage rate or something. It was terrible. So you have to be very careful with
Yeah.
the loans. But anyway, for our bookkeeping needs, it's important for us to recognize if you're the kind of person who's just taking the settlements as they come in and saying that that's revenue,
Right.
you're missing not only all of the things we talked about beforehand, but you're also now missing a big liability account, a lot of interest, a lot of fees.
Yep.
So that's a really important one. So as always, take time to understand what the source document is or are,
Mm-hmm.
and then how that source document is populated. I do like the dashboard on Square, and so I actually didn't mind that part. I did have to get data from more than one area in the dashboard in order to populate my Excel thing. Um, it is easier to book using Square with a recurring journal entry because you can use Sassant or Write Tool. I just found out recently, Write Tool is my favorite thing that has happened in the past year. I love Write Tool so much. Um, but Write Tool can take a journal entry that's in Excel and you can copy it and you can
Mm-hmm.
paste it into QuickBooks. It's just amazing. So
Nice.
they're in Square did release their own sync, but it was just awful. They
It was
only did per
awful.
transaction. You tried it as well.
I came across it after a client tried to do it themselves, and oh man, this poor
Oh
lady.
boy.
Yeah,
Yeah.
it was terrible.
Yeah. There was no way to troubleshoot the sync. It didn't always balance. You only could do per transaction. So let's move forward one more slide. So here's what we tried to do. We I came up with this idea. So this
Mhm.
is the same company that we started out with that was handwritten, was now using Square and still is to this day. And I said, okay,
Ooh, I think
from,
these were these backwards?
nope,
Oh, okay. Sorry, go ahead.
it's okay. So I was from one register report, I was taking this information. This was the old register. I was taking this information from one, and then from the cafe register, I was taking the other, because at this point they had a bar on one side, a cafe on the other side, and then from the Square dashboard, I would collect the information was at the bottom. And so these were my source documents here.
Okay.
My source documents were the bar register, the cafe register, and the Square dashboard. So now go to the next one. So I
Ah,
realized that if that dashboard were a journal entry, if we only used the dashboard, then we could
hmm.
get all of this data except the breakdown of gross sales. We wanted the
Okay.
breakdown of gross sales by register. So then we would collect just that information. It was still a pain in the butt, but it was way better. But I was like, what if we could write a software that would do this for us automatically,
Oh my goodness.
right? So go to the next page. My husband's a software developer. I hired a buddy of his who wanted to like experiment with this particular kind of code. And we worked on this for months and months and months and months. And it turns out, to go back to the comment I made a few slides back, where we saw a very small excerpt of all of the individual transactions that made up a day. Okay,
Mhm.
that is the only way that these companies like Synder, that's the API that they get. They cannot look
Right.
at the dashboard. So be
Right.
patient with them when they say we can't do X, Y,
You
or
can't
Z.
access it.
It's because Square is taking the individual transactions and they're summarizing them for you on that dashboard. Synder's doing its best to mimic that, but they can't actually like look at the dashboard. And that is what we found out. And it was so hard.
Oh, that's
And we
frustrating.
got pretty close. Do you see how on the right-hand side, we've got a bunch of numbers? And then at the
Yes.
bottom, we have X's, positive and negative X's. Those X's were the only things we didn't have working.
Okay.
And then we gave up on the project because
Oh,
I found out at the time, this was many, many, many years ago, that there's a company called Shogo that was already doing this, and it was $39 a month.
oh no. The other side of it
So
too, I think, dabbling in the software development part of it is that these things, the minute that Square or the system makes an update or a change to the process, you then also have to update your whole process. And that is
absolutely,
very difficult to maintain.
absolutely. And so I try to have patience for Shogo and Bookkeep and Synder, which are the three. I've never used Commerce Sync. I know it's out there as well. There might be others. Oh, somebody mentioned Toast and Extra Chef. We've had a
Mhm.
very bad experience with Extra Chef, so it's also extremely expensive.
Yeah.
I know there are people out there that like that sync, but I suspect those are people who don't know there are other systems that can do it better than Extra Chef. So we currently only have one client who's using Toast, but we do have them syncing not through Extra Chef.
Got it.
So yeah, so you know, these different companies, the reason we use more than one is that for Shogo, for example, that was the only one that existed back then when we first started
Right.
using them. So we still have a lot of legacy clients on Shogo, but there are a lot of things about Shogo that we don't like. You can't, for example, the accountant does not have any control over rebooking missed or incorrect transactions. So you have to get in touch with Shogo support and wait for them to sync it. So that is super frustrating. Synder actually answered my prayers I made a list of all things I didn't like about Shogo and all the things I didn't like about Bookkeep and things I did like. And I did a Synder demo and was like, oh, check, 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 check. They don't support all of the platforms that we use, so we don't use them
Correct.
for everybody, but we are slowly switching over all of our Square clients to Synder because they figured out what it took me months and months and months of work to figure out. So if you want to do the next,
There we go.
I'm seeing Margin Edge recommended in chat, and I've never used that one, but I would love, love, love to take a look at that one.
Yeah,
Thank you for the tip.
no
So
problem.
you still need to take, I keep coming back to this, you still need to take time to understand how the data is populated.
Yes.
Relying on automation is wonderful, but it means that a small mistake can be exacerbated if you just let it go. My
Just let it
husband is
go.
a software developer, and he worked for a major trading firm, stocks trading firm, that had a few cents off in some of their trades, but because it was high volume, high
Mhm.
frequency trading, they ended up having to, like, they almost
Oh
went
my
bankrupt
goodness.
within a week. So, right, when you automate something, the more frequent you're posting and the less
Yes.
you're checking on it, the
It's
easier
not
it
set it
can
and
go.
forget it.
Yeah, definitely not. So check for missing or duplicate daily entries. Keep the mapping updated, especially when new items are added. Ideally, pick a system, like I was saying before, that lets you do any of these resyncs yourself rather than having to rely on the company to do it for you.
I will say
Hit
also one credit to Synder on that is picking a system that lets you unsync when
Yes.
you need
Oh
to.
my gosh.
So rolling back, if there is a mistake, let's say you set up your mapping, something is wrong, or let's say they've now added a new income stream, something's changed,
Mhm.
whatever the case is, and you want to tweak the
Totally.
entry, you can roll it back, fix
Yes.
it, and then resync it, which is also really nice.
I love that. I'm so glad you mentioned that. That is, yeah,
I love that
not
thing.
just syncing, but
Unsyncing.
unsyncing. Yes, if that's a thing. Exception reports, I totally want to take a second to talk about this because that's my biggest beef with Bookkeep. We use Bookkeep for Squarespace because they're the only ones out there, to my knowledge, that are doing Squarespace. It's an exceptionally difficult sync, and
Mhm.
it doesn't work perfectly, but they've we've done a lot of QA for them inadvertently, but also they've been really, really gracious about us helping them make it better. But one of the problems is that they send you a report every day that's got all of your clients listed. I have to look at that report to see if there's a problem. I
That's
don't want that. I do not want to do that. I don't want to get a report unless something goes wrong.
something goes wrong. Yeah, I want to know when something's wrong.
Synder
Because
does
I
a
don't want to get
great
used to
job.
seeing it and then dismissing it, essentially.
Nope, I missed one once. I was on vacation, missed one. It ended up causing a problem. Yeah, it's a problem. So exception reports are your friend. Daily status reports are not. One thing that I haven't seen in any of the systems yet is that I would love help with the 1099K reconciliations. A 1099K is the document that the client gets for any credit card, debit
Credit
card,
card
electronic
processing.
settlements. And they get that reported, and it includes all the receipts. It includes sales taxes. It includes gift card
Right.
purchases. It includes tips paid out. Now, those things
Yeah.
are going to show up on your liability accounts or, on your balance sheet. And they're not part of sales, and they shouldn't go in there. So it was very hard to reconcile those
Yeah.
1099Ks against the point of sale systems. And Synder, I've mentioned it before. I would love this. This could distinguish you like more than anything. Like this nobody's doing this right now. I would love that. So I don't know. We have more slides, right?
Yes.
Yes.
This is the last one.
Daily sales journal entries mean you have comparative data to work with period over period. How did you do the day before Thanksgiving last year compared to the day before Thanksgiving this year, or record store day last year to this year? That
Yeah.
kind of stuff is so important. Departmental sales as well as departmental COGS, if the point of sale supports it. Those are essential for real-time managerial analysis. Internal controls can be easily implemented and maintained, even when you've got these loan repayments, because you can see what's happening. It's all there. It's inside the point of sale system.
Transparency is priceless.
And when a change happens, it can be identified and addressed immediately. There is no need to rebuild your entire journal entry mapping system, which is what we had to do in the past and what we still have to do with Booklog, Thunder, Jane App. Jane App is the point of sale system that a lot of like holistic health and acupuncture clinics use. So yay for the magic of Synder and the other syncing softwares that are out there.
Yeah. I know. So obviously we've discussed this, but for anyone listening, I focus more on e-commerce. So a lot of online sales. And I make the decision between like daily entries versus individual sales based on usually the volume of sales, but then also what the client is selling, because we can usually then the idea is to get that into maybe their CRM or help them with their marketing, and we can run reports based on, you know, products, et cetera, through there. And one thing that I always try to point out when we do these is that Synder is one of the only softwares that allows you to do either, right?
Yeah.
So you can
Yes.
do a daily summary. You can also do a per transaction, meaning every sale that's going in. And they've actually just introduced payout sync. So if you have a client that is holding off on their payouts, maybe they're not doing a daily payout and they want to do it every couple of weeks, or they're doing a manual payout when they get to a certain amount, whatever that looks like. You can actually now also do an entry to match to that payout coming into their checking account. So I guess just speaking to the flexibility that is Synder, they're one of the only ones that I have found that have offered those different options. And another one, and I don't know if you've dabbled at all with the rules, but you can also customize further either the syncing information into QuickBooks or reporting sometimes also with their
Rules
custom rules.
rules is something that we haven't implemented yet, but I'm so excited because the client that I showed you where it had the written stuff and then later on they switched to Square, we're going to be
Right.
switching them to Synder this year, and they have certain types of things where rules are really going to come in handy, which is
Yeah.
based on the time of day
Ooh,
of their transactions, because they're a cafe and a
okay.
bar. They
Mm,
actually want to look at some of the sales based on that. They want it in their GL because it's going to help them
oh,
match against their COGS. So I thought that was great.
yeah, that's pretty
Um,
cool.
somebody was asking in the chat about what we're using
Yes.
instead of Extra Chef. We actually, I don't think that Synder syncs with Toast, but Shogo does. And
Hmm.
so that's who we're using for Toast. Shogo breaks a lot, and that is it's different than Synder in that way. They break a lot, but they do send exception reports, and
Hmm.
they do have good support so that if you need help figuring out why it broke, you can go back to them. I have my switching to Synder is not a reflection on Shogo. I just think Synder does it better. Shogo saved my butt many years ago, and I'm loyal to them in certain ways and certain things. They
Yeah,
do a perfectly decent job with Toast, but anytime you have an open check that has not been closed out, you end up with problems. And so you have to get constantly follow up with the client and be like, can you please close this check? Can you please close this check? Can you please?
that's
So
annoying.
that can be a bit of a headache, but it works. I mean, and the client that we're using it with is somebody who looks at his data on a weekly basis for prime costs, which are labor
Okay.
and cost of goods as compared to revenue. And so it's very important for him to have
Yeah,
a daily sync.
very cool. Well, thank you for joining us and thank you for sharing your journey with us.
Yeah.
And thank
It
you
was a
everyone that
journey,
is,
right?
yes,
It
it is a
was.
journey. No, for sure. I feel like we actually saw the actual journey going in from how it started to where you're at now. So I appreciate the detail. And then for everyone that is on with us today, Cinder will reach out, they'll send you the recording, but then they'll also going to send you an offer to demo Cinder. And then also, I believe it's a free month worth of using the product rather than a certain number of syncs. So it's a special offer for anyone that's on the webinar. So yeah, I always say that if you are on and you have questions or if you'd like to connect, LinkedIn is probably the best way to do so for me. You know, add me on there, send me a message if you have a question or there's something you want to follow up on. I know
You
Nancy
know,
is super
right
friendly,
here.
so I was going to say for sure, you can reach out to
LinkedIn.
her online as well.
LinkedIn,
Just,
and also at thedancingaccountant.com, I have an award-winning blog that gets posted regularly to MSN. So
ooh,
follow
very
me
cool.
there. Yes.
Okay. Well, thank you guys so much, and thank you, and everyone have a good day.
Have a great one. Thanks for having me.
Thanks.
Happy syncing.
Bye, guys.